In 2026, a handful of companies are quietly accumulating an advantage that may never be overtaken. The AI race isn't coming, it's already here. The 5 biggest tech companies alone are spending $700 billion on AI this year. The question isn't whether AI will change everything, it already is. The question is, which stocks do you own before the rest of the world catches up? Here's what's different about 2026. This isn't speculation anymore. The 5 largest tech hyperscalers, Amazon, Google, Microsoft, Meta, and Apple, have publicly committed to spending a combined $700 billion on AI infrastructure this single year. And that money has to go somewhere. It goes to the chip makers, the manufacturers, the cloud providers. Today we are going to look at exactly who's cashing in, and more importantly, which 5 stocks offer the best combination of growth and value right now. We'll tell you what analysts say, what the data shows, and we'll rank them from safest to most explosive. Before we get into it, quick note, nothing in this video is financial advice. This is for educational purposes only. Always do your own research. Alright, let's get into it. Starting with number 5, our most aggressive, highest upside pick. Number 5, CoreWeave, ticker CRWV. CoreWeave's entire business model is simple. It rents out NVIDIA's most powerful AI chips, the ones most companies can't afford to buy outright, to AI labs, researchers, and enterprises. Now here's the number that stopped us in our tracks. In 2023, CoreWeave made $229 million in revenue. In 2025, $5.1 billion. They now operate 43 data centers globally. Their clients? NVIDIA itself, OpenAI, Microsoft, and Meta. Now, the risk. The stock is down 55% from its 52-week high. The company is not yet profitable, and one client, Microsoft, accounts for 67% of its revenue. That is a concentration risk. But here's what has some investors quietly loading up. Management is projecting revenue to jump another 235% in 2026. That would put CoreWeave at over $17 billion in revenue. The demand for AI computing power is not slowing down. If anything, it's accelerating. CoreWeave exists to supply it, but we want to be absolutely crystal clear. This is a high-risk pick. Do your own research before making any investment decisions. Number 4, and this one surprises most people, Meta Platforms, ticker META. Yes, the Facebook company. Meta is projecting $135 billion in capital expenditure in 2026, primarily for AI infrastructure. Most investors see Meta as a social media company. Smart money sees it as the most powerful AI deployment platform on Earth. When Meta's AI improves its advertising engine even slightly, across 3.2 billion users, the revenue impact is measured in billions of dollars. Meta's Llama AI model is open source, which means it's being used and improved by developers worldwide. That's a distribution mode that money alone cannot buy. Recent news around an AI model delay spooked some investors. The stock sold off, and in our view, that created a buying opportunity. The fundamentals haven't changed, the spend hasn't changed, only the sentiment did. Number 3, the one sophisticated investors are quietly watching. Broadcom, ticker AVGO. Think of it this way. If NVIDIA is the off-the-shelf solution, Broadcom is the bespoke tailor, designing custom AI chips for every major client's specific needs. Google uses Broadcom chips for its AI. Meta does. Apple does. Broadcom helps Google design its own tensor processing units, the TPUs that power Google Search, Google Translate, and Google's DeepMind lab. As hyperscalers look to reduce their computing costs, custom ASICs are cheaper and more energy efficient than general-purpose GPUs for specific tasks. Demand for Broadcom's work is surging, and unlike many AI stocks, Broadcom pays a consistent dividend, the AI play that also pays you to wait. Number 2, the pick and shovel monopoly of the AI era, TSMC, Taiwan Semiconductor Manufacturing Company, ticker TSM. Here is a question. Who wins when NVIDIA, AMD, and Apple all compete for AI dominance? The company that makes all their chips.
Get your tools right here. You can't strike it rich without the finest steel in the territory. Only $10 a shovel.
TSMC manufactures the chips for NVIDIA, AMD, Apple, Broadcom, and virtually every other major AI company on Earth. It holds a virtual monopoly on advanced logic chip manufacturing at 3 nanometers, 5 nanometers, and 7 nanometers. Revenue grew 38.6% in the most recent quarter. Net income surged over 60% year-on-year, and TSMC is planning to spend up to $56 billion in 2026 alone just to build more manufacturing capacity. One risk: Taiwan's geopolitical position. That is a real concern and we won't dismiss it. But the US government's significant investment in TSMC's Arizona facilities is quietly de-risking that story for long-term investors. And the number one AI stock of 2026. It was never going to be anyone else: NVIDIA. NVIDIA controls 85% of the AI accelerator market. Not just a large share, 85%. Let that number sit for a moment. Full fiscal year 2026 revenue, $215.9 billion, up 73% year over year. That is the annual revenue growth of a company with a $2 trillion valuation. Here is what most people miss about NVIDIA. It is not just a hardware company. It is a software ecosystem. The CUDA platform means developers build specifically for NVIDIA architecture. That's like building all your apps for only one operating system, and that operating system is owned by NVIDIA. And here is the part that stops most people cold. Despite being one of the largest public companies in the world, analysts at Morningstar say NVIDIA is still trading at a 34% discount to its fair value. That is not a typo. 48 Wall Street analysts cover NVIDIA. 48 of them maintain a strong buy consensus. The average price target is $256. There is no other stock on Earth with this level of conviction behind it. NVIDIA currently holds an estimated $500 billion in order backlog, with approximately $300 billion converting in 2026 alone. The demand pipeline is not a question, it is a certainty. Let's bring this together. 5 AI stocks for 2026, ranked from most aggressive to most stable. If the $700 billion being poured into AI infrastructure in 2026 tells us anything, it's that these 5 companies are exactly where that money is going. Whether it's the chips, the manufacturing, the cloud, or the distribution, they control the infrastructure. They collect the toll. Your comfort with risk determines your mix. If you want the stability of a near monopoly, NVIDIA and TSMC are your anchors. If you want explosive growth potential, CoreWeave is your bet. Most smart portfolios hold both ends of the spectrum, and we must be absolutely clear one final time. Nothing in this video is financial advice. Everything you've heard today is for educational and research purposes only. Please consult a licensed financial advisor and conduct your own due diligence before investing in any of these or any other securities. The world running on AI is not a sci-fi premise anymore. It is a 2026 capital allocation plan. The 5 companies on today's list are the infrastructure of that world. Which of these names is already on your watch list? Drop it in the comments. We read every single one. The thesis is simple. Find the picks and shovels of the greatest technology transformation in human history. Own them before the rest of the market fully prices in what's coming. AI spending is not a one-year event. The hyperscalers have committed multi-year capital plans. This is a sustained infrastructure build-out. Whether you are an aggressive investor or a conservative one, the AI revolution has a stock for your risk profile. The question is not whether to have exposure. The question is how much. The next 4 years may look like nothing we have ever seen in tech. The companies positioned at the foundation layer today are the ones that extract maximum value as the capability curve goes exponential. NVIDIA, TSMC, Broadcom, Meta, CoreWeave. 5 companies, 1 theme: the infrastructure of artificial intelligence. That's our list for 2026. If you found this analysis valuable, we'll see you next week. Subscribe so you don't miss it. If this kind of research helps you think about your investments differently, hit subscribe and ring the notification bell. Next week, we are looking at Bitcoin's next major move in 2026. The data is signaling something that most analysts are not talking about yet: